Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, April the 6th, 2016, and this is the Daily Report for Gold and Silver. The old saying, what goes up must come down, definitely applies to the precious metals markets today, with gold trading lower on the day, currently trading at $12.23 and change, puts it off approximately $8 on the day. The low $12.16.99 and the high $12.32 and change. So traders, if you recall from yesterday's show, I was quite impressed, and actually, as I told you, I was taken quite by surprise that we saw such a dynamic move in the gold market yesterday. As I said, trading up in double digits and definitely trading off of the levels of support that we were looking at, which was down around 1205 to call it 1211, 1212 in that area. We had the market spike up quite nicely, but at the same time, one of the rationale or the reasons that I didn't react, if you recall, and this is the same chart we used yesterday with the same lines that I put in yesterday, my sense was that we were in some sort of a compression triangle and that we were getting the market narrowing, and as it narrowed, we'd probably be range driven, and the fact that we were now at the top of the range, I believe my thoughts were I would buy if we broke above this price point, and that would be where I would expect it to break out. In other words, the direction that I would expect the market to break out. But until we saw that, I certainly wasn't going to enter a long position in the market. Now, we've had these series of lower lows, and take a look at the low that we got today. As I said, the low today came in at around 1217, and that is this candle right here. These are, of course, half-day candles that we're looking at. So you get 2 per trading day. So I've gone ahead and actually enlarged this chart so we can really take a closer look at it. But as I said, you get 2 candles per trading day. And when we take a look at yesterday's activity, the first part of the trading session is highlighted by this tremendous spike up to a high of about 1238. Now, it opens on the second or last half of the trading session yesterday, trades just a little bit above this resistance line or these series of lower highs that we got. And at the same time, it closes right in the area where it opened during that session and has a really fairly contracted range. Now, the market opens on today's trading activity right at the upper level of this resistance area right here. And now take a look at the fact that it trades to really the bottom of this particular compression triangle that we've added. So it really tells me that there could be some substance behind the identification of this compression triangle, meaning that as we reach the apex of this triangle, we should get some sort of a sizable break. And my sense is, because of the fact that we've had an A, a B, and we are in some sort of a C progression, which will probably turn out to be, as I said, a compression triangle, which will be numbered differently. But once we get to the conclusion of this, I believe the breakout really should be to the upside. So we're going to watch this closely over the next couple of days, because I think we're going to have an excellent buy opportunity in the market. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.